Hello, very good morning to all. I'm Kelvin here again. I hope that you all have a very wonderful and restful weekend. Very good morning. Today will be the Monday, the 14th of October 2024, a brand new week. So before we kickstart today's daily dose of market insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Okay, so as usual, our first start for our daily dose of market insights will be a recap of what has taken shape on Friday as well as over the weekend that could potentially impact the markets going forward, and as well as last Friday price movement on the very short term intraday basis. So let's start from Friday first. So Friday, we know that is a kind of a unofficial start of the Q3 US reporting season, kicking start with the major banks, the US major banks with JP Morgan and as well as Wells Fargo. So what we could see over here is that both these banks came in better than expected in their respective earnings, and even JP Morgan managed to post a surprise net interest income gain after last month weaker guidance by one of their key management. All right, and as well as it also rises its key revenue view for the next quarter. Very similar for Wells Fargo as well, where their investment banking decision managed to actually their revenue managed to actually surpass the revenue made from borrowing and lending. So net overall, these two major US commercial banks, I would say, or financials, managed to actually create a positive feedback loop into the financial sector of the S&P. So if you look at the S&P heat map over here, is that we see a slew of dark green in the financials sector. JP Morgan is up by 4.4%, and it has a spillover feedback loop into Citigroup as well, which is up 3.6%, and Bank of America up 4.95%, and Goldman Sachs up by 2.5%. As we know that Goldman Sachs and JP Morgan, they have a higher weightage in the Dow Jones Industrial Average. So because of this outperformance by the financial banks in the US against the broader market, that managed to see the S&P 500 outperforming, the Dow Jones Industrial Average, the Dow Jones Industrial Average outperforming the major US stock indices on Friday, outperforming the Nasdaq 100. It added close to 1%, 0.97%, whereas the Nasdaq 100 only closed 0.15%. The SPX is up 0.61%, and the top performer is the Russell 2000, up 2.10%. So net overall, it seems to me that the market is still looking into that so-called soft landing to no landing scenario in terms of the US economic growth, despite the fact that on Friday, we do have a weaker consumer sentiment data. So let me share with you what happened on Friday over here. This is the US consumer sentiment data. So US consumer sentiment data, that's the flash figure for October, slipped down slightly below market is expecting. So market is expecting to actually inch up higher to 70.8, but actually reduced down to 68.9. But that actually being struck off by this better than expected Wells Fargo and JP Morgan earnings report that managed to actually create that short-term positive feedback loop into the US stock market, still playing on into that soft landing to no landing scenario. That means market doesn't believe that the US may slip into recession, at least from a price action perspective, that created that outperformance of the Dow Jones Industrial Average and the Russell 2000. Okay, so that's what happened on Friday. And on Saturday, we do have this China highly anticipated Ministry of Finance press briefing over here. But however, this press briefing was rather lackluster. So at the end of the day, let me share with you. Yeah, perhaps this is the key takeaway. So at the end of the day, it's just more rhetoric rather than the exact scope and the exact amount of new physical stimulus that investors and traders want to hear. But unfortunately, the briefing from the Ministry of Finance on Saturday did not actually reveal any amount of fresh new stimulus, and in terms of the key concrete steps on how to address this ongoing deflationary risk spiral in China. So it's more rhetoric over here. So what they do over here is that they allow uh, the local province government to use the money raised from their special bonds to buy unsold homes and turn them down into subsidized housing. But it's more of a wording instead rather than the exact amount. So how much is supposed to be raised, and in terms of their special bonds, and is this special bonds part of a fresh new stimulus? All in all, nothing is being said about that. And also on top of this over here, China also releases its latest CPI data and PPI data for the month of September, and very clearly we start to see a clear signs of a deflationary spiral that is still being entrenched in the Chinese economy. Why? Because the inflation rate year on year slipped to a 3-month low. So previously it was 6.6% year on year in the month of August. Market is expecting it to be no change in the rate of growth for inflation, but however it slipped down to a 3-month low of 0.4%. And even the price producer index, we call it the factory gate prices, where producers may get their so-called cost of cost of production also slip down to deeper in the rate. So previously it was negative 1.8% year on year in August. So it actually fall down by a larger magnitude, pardon me, negative 2.8% year on year, way below expectation of negative 2.5%. So overall, what you could see over here is that there is a clear danger sign of this entrenched deflationary spiral that is being played out in the Chinese economy. However, time is actually closing for the China top policy makers to actually address this problem by creating much more confidence in the Chinese investors and traders, by instead of using rhetoric to actually boost confidence. Traders and investors now want to actually see what is exactly the real money coming out from the Chinese government budget, and what are the actually concrete steps, the detailed steps that how this new physical stimulus is going to be allocated to improve consumer confidence and business sentiment. So if this doesn't start to actually come up pretty soon, and we do have another key meeting out in China, which is coming towards closer to the end of this month, which is the monthly political bureau meeting and the MPC standing committee meeting, where official policy is being rubber stamped into approval. So these two key meetings, investors and traders will be watching out. So if there is still lack of concrete detailed plan about, or any mentioning about this new physical stimulus, putting it in official figures, I'm afraid that the markets may start to remain lethargic going forward. So that actually being explained as well. If you look at today's price section on the Hang Seng Index, which is open for market after closure on last Friday, all of them are in the red on the Hang Seng indices. So the HSI is down by negative 1.32%. The Hang Seng Tech is down negative 3%, and the HSC's CEI is down negative 1.25%. So we just see only a slight minute gain in the CSI 300 index, which is up positive 0.36% right now. Okay, so now that is actually the key events and data that has taken shape on Friday and as well as over the weekend. So right now, today's there'll be no sharing. No, I mean today's there'll be no sharing of this longer term fundamental and intermarket dynamics, because not much interesting chart to share with you all. So let us now straight away jump straight into the intraday technical outlook on the various cross asset classes. So with that, let us start from the FX market first. So before we jump into the euro dollar, let's have a quick look at the performance of the dollar against the other major currency from a very short term 5-day rolling performance base. So with that, let me expand my screen so that you guys could see. Okay, good. So over here, what you could see over here is the 5-day rolling performance of the dollar against other major currency as of now that we are speaking. So the outlier right now is a very strong push out of the dollar strength against the Canada dollar. Dollar CAD is due to more of a country specific event that taken shape on last Friday. This Canada job number that causing the dollar to be strengthened much more pronounced against the Canada dollar. So see the dollar CAD in a very short-term uptrend right now. And what we could see over here is that the rest of the other major currency against the dollar seems to be rather flattish for now. Even the dollar sterling starts to actually lose much ground as well, followed by the dollar euro and the dollar Swiss, and as well as the dollar CNH and dollar Sing, all trading below the dollar index 5-day rolling performance. One thing that is outlier right now together with dollar CAD is this push up in the dollar yen at this juncture. Okay, so now let us start to take a look at the individual technical intraday outlook on the major cross currency, major dollar pair, starting with the euro dollar. So the euro dollar on last Friday we turned neutral between 0.950 and 0.890, which is very close to 200-day moving average. So still no change. Still on the intraday basis, we still expect it to be trapped within this sideways range for now, 0.95 and 0.890. And do not forget there is this key risk event that is taking shape or pertaining to the euro dollar that coming into the later part of this week, which is the ECB interest rate decision and ECB press conference that's out on Thursday. And we'll talk more about that in greater details in my upcoming daily dose on Tuesday and as well as on Wednesday. So as we could see over here is that no change, 0.95, 0.890. So this will be the neutrality range. We will actually look to remain neutral on the intraday basis unless we start to see a clear breakout above 1.0950. That means for hourly close above this level that has been tested 2 times on the intraday basis on last Friday. With an hourly breakout above it, then we could potentially validate a intraday bullish bias on the euro dollar, seeking out the next near-term resistance level at 110 figure next, followed by 110.55, which correspond very closely to the 50-day and the 20-day moving average, coming to as very closely to this graphical resistance as well at 110.55. So that's for the euro dollar. Turning our attention will be the sterling pound, the sterling dollar. So the sterling dollar continues to manage to hover above the 130 figure short-term pivotal support level, and which is also the medium-term pivotal support on the daily chart as well. So it's put it in a way that I would say is more like a medium-term pivotal support level for the 130. So why is it medium term? That is being derived on the daily time frame. So if you look at the daily time frame over here, this 130 figure level, 130 figure level is in fact the pullback of this former range resistance level, a major symmetrical triangle range resistance, linking the high of 13th of July and as well as 18th of July this year, 13th of July last year, 18th of July this year, managed to stage a bullish breakout on the early August. We tested it again on the 11th of September and coming very close to it on last week, Thursday, which is very close to the 130 level. So this is indeed a medium-term pivotal support level that has been a clear key inflection point in the past 6 months to 1 year. Okay, now back to the daily time frame over here. So first resistance level to watch will be 131.07, which was 9th of August minor swing high and 8th of August minor swing high in play that kept last week rebound. Okay, that kept last week rebound. So 1.3107 will be the first resistance level to watch. A breakout above this 131.07 potentially sees the next near-term resistance coming in at 131.60. All right. So, but however, if it starts to have a hourly close below 130 figure level, then today's intraday bullish bias on the sterling dollar will be invalidated to see the extension of this corrective decline sequence to expose the next near-term support level at 129.40, followed by 128.60 level. Okay, which is this former minor swing high area of 30th of July, 1st of August, and 14th of August, as well as 16th of August. Okay, this area here. Now, with that, let us now focus on the Aussie dollar. So on the Aussie dollar, price action continues to trade above the 67.20, 67 figure short-term pivotal support level that we highlighted on Friday as well, and price action also managed to actually oscillate or flirting around very closely to the 50-day moving average over here. So still no change. This is still a support level that is being supported right now, but it got to actually break out very quickly this intermediate resistance level of or near-term resistance level of 66 67.70, pardon me, 67.70. Only a breakout above 67.70 potentially may trigger a much more pronounced short-term recovery scenario or mean reversion rebound scenario to expose the next resistance level to watch out for on an intraday basis at 68.10. Only an hourly close back below 67 figure level. So I put it above access now. The last week low at 67 figure level with a breakdown below 67 figure level, then that would invalidate today's intraday bullish bias to see the extension of this corrective decline sequence to expose the next near-term support level at 66.70 followed by 66.35, which correspond to the key long-term 200-day moving average. So that's for the Aussie dollar. Now, what's next for the dollar yen? So dollar yen now is attempting to actually test that 649.30 medium term pivotal resistance level, which was our level to maintain our intraday bearish bias on Friday. So on Friday, you also attempt to actually look to push down to test that 14810 level. So this is something like a downside trigger level that we have on last Friday. So with that, I will actually flip to a neutrality stance for today on the dollar yen. So kind of mixed element right now, but due to the fact that on the downside, price action refused to push down and starts to shape a series of higher low since 8th of October. So with this mixed element that is a mixed element that is playing out right now, I'll have a neutrality stance between 14930 and 14810. However, if price action have an hourly close at 14930, then we got to validate this very ongoing mean reversion rebound scenario that has taken shape since 16th of September to test the next near-term resistance level at 150.20 followed by 150.90, which correspond to the 200-day moving average, and as well as this former medium-term, okay, this level here, former major ascending channel support from the low of 16th of July. This dotted a green line now turns into a pullback resistance at 150.90. Okay, if you go to the hourly chart, okay, it's over here, this dotted green line, 150.90. Okay, which correspond to the 200-day moving average as well. Okay, so that's for the dollar yen. And right now, let me share with you one particular FX cross pair that I found that have an interesting short-term intraday technical configuration playing out. So the short-term FX cross pair that I want to highlight over here is the euro sterling, the euro sterling. So if you look at the euro sterling over here in the last 8th of October, it started to print a series of lower high, and this lower high managed to form right exactly close to the upper boundary of this medium-term descending channel that is in place since 8th of August over here, right? And the hourly RSI continues to actually print lower high as well, below the 50 level mark right now. So net overall seems to us that downside momentum is starting to build up again on the euro sterling on a very short term basis as being expressed by the technicals on the hourly chart. So I'll be using last on Tuesday minus swing high area 8th of 7th October and this 8th of October. So very close to the upper boundary of this medium term descending channel at 84 figure level. So as long as 84 figure level, short-term pivotal resistance is not surpassed on the upside on the euro sterling, potentially there could be further weakness on the euro sterling. A break below 83.55 exposes the 1st of October minus swing low area at 83.10, and below it sees 82.80 next. However, if price action starts to move up and have a clearance with an hourly close above 84 figure level, this intraday bearish bias on the euro sterling will be invalidated to see a push up a continuation of this mean reversion rebound that has taken shape previously from 1st of October to 3rd of October. It may shape another leg to expose the next resistance level at 84.25, followed by 84.54 next, which correspond closely to the 50-day moving average acting as a resistance level. Okay, so that sum up the intraday technical outlook on the major dollar pair, and as well one particular interesting FX cross pair, which is euro sterling, that I wish to highlight for today. Now, turning our attention will be the major stock indices. So what will be the intraday technical outlook on the Hang Seng Index or the Hong Kong 33? So on the Hong Kong 33, today's price action managed to actually same, no change. So this is the levels to watch. Okay, let me put it over here. So on last Friday or on Thursday, okay, on Thursday, the price action managed to hit the 21,055 level, 21,550 level before trading down, and the Hong Kong stock market was closed for a public holiday on last Friday, and it's still, whatever price action right now, it still continues to hold above the 20-day moving average, which is coming to act as a support level at 19,790. And this 19,790 is our short-term, our medium-term pivotal support. Why? Because it was from this previous former multi-week up move that hit a peak on the 17th of May. Then thereafter, it did almost close to 2 months plus of corrective decline before shaping this very strong push rally up from the low of 10th of September. And as well, if you will do the Fibo retracement of this last steep move up from the low of 11th of September all the way up to the high of 8th of October, that correspond to the golden ratio of 61.8%, which is 445. So this 19,790/445 is a medium-term pivotal support. Anything that is in between over here is considered as whipsaw. So I cannot put so levels in between over here as my pivotal support for today. So this could be, yes, something like my first support level to watch. Okay, so that was last Wednesday, and today's Asia session is sell off, and today it managed to actually, or right now it managed to shape a bounce off it this level again at 20,525. But I don't want to put it so tight over here, 20,525, just in case of any whipsaw, given that right below it there's another higher level of support level that is being formed on a daily time frame, which is 19,790 slash 445 level. More and as well as more technical elements converging to this particular support zone as well, and also being at the 20-day moving average as well. Okay, the rising 20-day moving average is also coinciding with this zone. So with that, still using that 19,790/445, any particular pullback, as long as it didn't surpass below this level, we will still maintain that intraday bullish bias. But price action got to clear fast above the 21,550. That means we need to have an hourly close above it pretty fast, 21,550. Then we could start to see a much more a turnaround in terms of the sentiment in the Hong Kong 33 to expose the next near-term resistance level positively at 22,320. A breakout above 22,320 may see the retest very close of 7th of October minus swing high at very closely to the next resistance zone at 23,550/23,670. However, if price action starts to break below 19,790/19,445, then this corrective decline scenario that has taken shape since 8th of October may extend on the downside to expose the 50-day moving average, also converging with a graphical support at 18,230 as well, which is the former minus swing high of 30th of August. Okay, so that's for the Hong Kong 33. Turning our attention will be the Japan 225. So still recall on the Japan 225 on last Friday, we are looking for the price action at this 39,780 to actually shape another round of kind of a mean reversion decline to retest the lower limit of that symmetrical triangle support level at 38,740/38,510, which also confluence with the rising 20-day moving average as well. But however, price action didn't actually come down as intended. It broke out, retest the symmetrical triangle range resistance, now turns into a pullback support level, and continues to see this positive reaction of it in the last 2 hours in today's Asia session. So with this positive bullish breakout and reaction of the former symmetrical triangle minor range resistance now turns into a pullback support, we got to respect this positive price action and flip to a intraday bullish bias for the Japan 225 or Nikkei 225 using last Friday minus swing low, which is also the congestion area of 11 of this area here of last Thursday, 39,380. So 39,380 short-term pivotal support level, flip to a intraday bullish bias on the Japan 225. Next near-term resistance level to watch, 40,155/40,280, followed by 40,800/990, which is a 0.674 Fibo extension taken from the low of 6th of September, pardon me, yeah, 6th of September, and as well as this graphical minor swing low area now turns broken down into a broken down support, now turns to a pullback resistance from the 5th of July 2024. Okay, so that's for the Japan 225. But however, if price action reintegrate below 39,380 with an hourly close below it, that means i.e. today's intraday bullish breakout of the symmetrical triangle range resistance is considered as a failure breakout. This is where price action may slide further to test the next near-term support level at 38,740, followed by 38,510 next, 38,510 next, pardon me. So that's for the Japan 225. Turning our attention will be the German 30 or the German DAX. So the German DAX continues to actually inch higher, heading towards the current all-time high area at 19,460/19,550 from here. So with that, since price action haven't staged a bullish breakout yet above 19,460/550, the first support level to watch in any case on a pullback will be at 19,270, this line here, 19,270. So I will be adjusting using no change close to the 20-day moving average, 19,130 as my short-term pivotal support level, because I don't want to tie it so tight over here at 19,270 just in case of any whipsaw. Still using 19,130 as my short-term pivotal support level. Above 19,550, potentially see the next resistance coming in at 19,690/19,755, which confluence with the 1.236 Fibo extension from the low of 11th of September. Only an hourly close below 19,130 will invalidate today's intraday bullish bias on the German 30 to kickstart another round of minor corrective decline sequence towards 18,960. A breakdown below it sees a further slide to expose 18,690, which correspond to the rising 50-day moving average as well, pretty much closely. So that's for the German 30. Our next focus will be on the major US stock indices, starting with the US Wall Street 30 or the Dow Jones Industrial Average. So like I mentioned earlier at the start of today's daily dose, the Dow Jones managed to outperform the other major stock indices, the Nasdaq and the SPX. Why? Because of its higher weightage in the financial stocks like Goldman Sachs and JP Morgan, which have a positive performance on last Friday. So this performance on last Friday managed the US Wall Street 30 to seek a fresh all-time high and broke above the former minus all-time high or minus high on the 27th of September over here. So this potentially could now turn into a pullback support right now for today, given that the RSI is at the overbought level. So I'll be using last Friday minus swing low and also correspond to the former minus swing high of 7th October, now turns into a pullback support at 42,440. So as long as this pullback didn't surpass, so actually this pullback zone could be, this pullback, the first support zone or the pullback zone could be a range over here. 42,730 slash 42,630, as long as it didn't dip below 42,440, which is our Titan key short-term pivotal support for today. We will still maintain a intraday bullish bias on the US Wall Street 30. First resistance level to watch 43,170, which is a Fibo one-time Fibo extension level from the low of 5th of August. A breakout above 43,170 exposes 43,920 next, which is the 1.236 Fibo extension from the same low of 5th of August. Only hourly close with a breakdown below 42,440 on the US Wall Street 30 that would invalidate today's intraday bullish bias to kickstart a much more deeper minor corrective decline to expose the next near-term support area at 42,180, followed by 41,950, which correspond to the rising 20-day moving average, and as well closely to the lower limit of this minor ascending channel support that is still in place since the low of 6th of August. So that's for the US Wall Street 30. All right, flipping our attention now to the Nasdaq 100. So on the Nasdaq 100, no change. It hit the first resistance level at 20,360 before trading sideways on last Friday, but managed to held above the first support level at 20,154. So I don't put my pivotal support level too tight at 20,155. So I'll still use 20,000 as my key short-term pivotal support level, which is correspond to the rising 20-day moving average. A breakout above 20,360 still maintain that intraday bullish bias to expose the next near-term resistance at 20,615. So 20,615 graphically is this minor swing high of 16th of July. Only an hourly close below 20,000 today will invalidate today's intraday bullish bias to kickstart another round of choppy minor corrective decline to expose the next near-term support zone at 19,750 slash 19,630. A breakdown below it sees 19,380, which correspond to the rising 20-day, 50-day moving average, and as well as pretty much closely to this minor ascending channel support that I drew from the low of 5th of August. Okay, so that sum up the intraday technical outlook on the major stock indices. Turning our attention will be the commodities market, starting with this gold XAU slash USD. So for gold XAU slash USD, price action hit the first resistance level before shaping a pullback during Asia session, and right now it managed to actually cover the gap down in today's Asia session, which is rather positive. So with that, I given this covering of this gap down in today's Asia session, this particular gap over here. Okay, this gap down in today's Asia session, it managed to cover it. So I will actually still maintain that intraday bullish bias, but I will have a rather tight short-term pivotal support level for today, which is correspond to this 20-day moving average. That price action managed to reintegrate above it since last Thursday, now turns into a pullback support level. So sorry, so this will be my Titan key short-term pivotal support level at 2,627, just to make sure everything's correct. Okay, 2,627. Okay, let me copy this. Let me change this. 2,627. Okay, this will be the next resistance, next support level to watch. Okay, let me tidy up all the levels. Okay, so still maintain that intraday bullish bias on gold XAU slash USD, but given the current positive technical element that is playing out right now, explained earlier, which is the covering of today's gap down in the Asia opening session, we'll use a Titan short-term pivotal support level at 2,627. We also confluence with this rising 20-day moving average that price actually managed to have a daily close above it since last Thursday. So 2,627 short-term pivotal support. Next resistance level to watch out for will be 2,674 slash 2,684 level over here, 684 level. Yeah, these are the current all-time high area. Breakout above 2,684 potentially which is the current all-time high, sees the next resistance coming in, which is the 1.382 Fibo extension taken from the low of 4th of September over here, coming in at this 2,709 level. Okay, 2,709 level. Okay, 2,709 level, and as well as this 1.382 Fibo extension taken from the low of 26th of July, okay, which confluence very close to the 2,709. So this will be like a zone to watch. Okay, 2,709 slash 719. 719. Okay. Okay, so this will be the next resistance zone after the current all-time high at 2,684 is being taken out on the upside. Next near-term resistance will be at 2,709 slash 719, which is defined by a Fibo extension cluster. However, if price action starts to shape a hourly close and a breakdown below 2,627, then today's intraday bullish bias will be invalidated to see the extension of another round of a minor corrective decline taking shape to expose the next near-term support level at 2,605, followed by 2,590 in the first step. So that's for gold, XAU slash USD. Lastly will be the West Texas crude oil. So for West Texas crude oil, no change. Still will be at the 73.15 level as my short-term pivotal support level, which is so the 50-day moving average acting as a support level as well. Still maintain that intraday bullish bias. First resistance level to watch will be on last Friday at 76.51. Above 76.51 may expose the next near-term resistance at 78.30, which is the minor swing high of 8th of October and also correspond closely to the 200-day moving average. However, if price action starts to break down with the hourly close below 73.15, and that would invalidate today's intraday bullish bias on West Texas oil to see another round of choppy minor corrective decline to retest 71.47 and potentially even 71.10 next over here. So that's for the West Texas crude oil. So that sum up the intraday technical outlook on the broad-based cross asset classes. So now let us take a look at the economic calendar to look out for what are the key events to look out for today in terms of data releases. So for today will be Monday. So it's rather a quiet day in the European session over here. So nothing to take note of except for later part of the Asia session. There's no exact timing that to be released. So that's actually China related data pertaining to money supply. So new yuan loans and M2 money supply and as well outstanding loan growth. Something important to look out for to see whether, despite the fact that in the last few months of monetary policy easing, whether this particular excess liquidity that is being played out in the Chinese economy, whether there will be demand for them or not. So this will be pretty much scrutinized on this set of economic data: new yuan loans, M2 money supply, and outstanding loan growth for the month of September. But unfortunately, there's no timing that is being specific by the relevant authorities, so it could release anytime today. So do keep a lookout for this data. And into the US session, at 3 a.m. Singapore time and 5 a.m. Singapore time, there will be two Federal Reserve officials speaking, Fed Wheeler and Fed Kaspari. All right, so that sum up today's intraday technical outlook and as well as today's daily dose of market insights. So with that, I'm Kelvin here signing off, and I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.